All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Thursday, everyone. Today's July 17th, 2025. Mark the date and time. This date will surely live in infamy, famey, I don't know. This date will surely go down in history because the federal government is cutting spending almost. They're like halfway. They're seriously considering maybe getting around to doing something. It's really an incredible day. So what happened? Yesterday, the Senate managed, in a very slim vote, managed to pass a spending rescissions package, basically cuts to previously authorized spending. They're cutting things like NPR, PBS, foreign aid. Of course, you know, the sensitive among us have their panties in a bunch all about that. Oh, my God, they're cutting spending to Elmo. Who cares? Government has a spending problem. We're all broke and difficult decisions need to be made. Take it up with your therapist and move on. A 51-48 vote. They almost didn't make it, even with a Republican majority in both houses of Congress. They just barely got it through the Senate. $9 billion. That is the totality of all of the DOGE spending cuts. Oh, the waste, fraud, and abuse. Remember all the money they were going to save? We had headline after headline about all the wasteful things that we were spending money on, and it looked like for once in our freaking lives, maybe somebody was serious about cutting spending, and they threw that all away. Donald and Elon got in a little fight very publicly. They raised the debt ceiling by $5 trillion, and now they're cutting spending by $9 billion. That's enough money to fund the federal government for about 11 hours. I kid you not. That is the totality of the spending cuts that we have gotten in the first half year of Donald Trump's second term as president. And, you know, when I said monumental achievement in the headline, hopefully some of you guys were picking up on the sarcasm there a little bit. I do not think this is a monumental achievement. This is a fart in the wind. This is stupid. Okay, great. We cut $9 billion. How come it's not $90 billion? How come it's not $900 billion? How come it's not $9 trillion over the next couple of years, which I'm pretty sure we could cut $9 trillion in spending over the next 10 years and still be running a deficit? And we're sitting here celebrating $9 billion. Guys, we got a spending problem. It's a huge spending problem. It's arguably the defining crisis of our lifetime, and we are failing in this task. Fiscal conservatives, you are failing. You are not doing what you were put there to do. Get better. Do better than this. Great, $9 billion after a marathon vote and all this other stuff. Good God. They're never going to cut spending, which is why I say, guys, none of us own enough gold for what's coming. Case in point, what happened yesterday with the dollar. If you guys may have noticed, shortly after the live stream yesterday, the DXY started to free fall and then very abruptly turned around and went back up about 2/3 of the way it had fallen. So apparently President Trump had meetings, serious meetings with members of the House of Representatives about firing Jerome Powell. Now, that's interesting because if he's meeting with guys in the House, you can kind of figure out what he's doing there. He wants to fire Powell because he wants easy money to pump his stock bubble. That's ultimately what he really wants here. But because of that recent Supreme Court ruling that carved out the Federal Reserve and basically said you can fire anybody you want except the Fed. So he needs the House of Representatives to impeach Jerome Powell for wrongdoing. It looks like they're trying to use this lavish refurbishment of the Federal Reserve building. And you know what, Federal Reserve, why not fix up the place? I mean, you just put 300 million people in the poorhouse with your money printing and inflation over the last 4 years. Why not treat yourself to some nice mahogany wainscoting in the office? Sure, why not? Look, they should have fired Jerome Powell years ago for the easy money policy. What he's doing now with not rate cutting, that is the right thing to do. We don't need rate cuts. Stocks at all-time highs, gold at all-time highs, Bitcoin at all-time highs, houses still at all-time highs. And we're talking about cutting rates. We haven't hit the Fed's arbitrary 2% inflation target in 52 consecutive months. And we want to fire the Fed chair because he won't cut rates? Guys, I am not the president of the J-Pal fan club by any measure, especially any of you guys who've been watching the channel for a few years. You know I have laid on the criticism pretty thick, but right now he's doing the right thing. The time to fire Jerome Powell was in freaking 2020, 2021, not now. Also going on this morning, tariff letters are going out again, 10 to 15% supposedly. That is the tariff flavor of the day. We'll see if that actually happens. A new meme stock in town, Open Door Technologies. Gotta love this one, a real estate stock. That one was up 43% yesterday. It's up another 40% this morning. We got a good old-fashioned short squeeze going in Open Door Technologies. Hedge fund manager Eric Jackson posted his bull case. I don't know if it was on Twitter or on Reddit. Basically, this bull case was largely based on 2022 housing numbers, which is not really all that. Let's just say the housing market, it's not the 2022 housing market right now. That being said, 25% short interest in Open Door. This one was ripe for a squeeze. Look, there's no telling how, when a short squeeze starts in one of these meme stocks, there's no telling how high it's going to go. It could go vertical for several days. It could rally 1,000% from here. But we do know how it ends. Eventually, the enthusiasm wears off, and you're left with a company that does not make money, has never posted an annual profit since the company existed. Open Door Technologies is basically like, remember Zillow's failed attempt to start flipping houses? That's what Open Door does. It was a SPAC that was launched by Chamath Wikipedia, whatever his name is. Yeah, it was one of his SPACs. This company is ultimately destined for bankruptcy, but it could rally substantially between now and then. We also got earnings this morning from Pepsi, beat expectations despite some falling U.S. demand. GE Aerospace posted increased guidance because of a big sale for over 400 jet engines to Qatar. I've had some people get on my case about the way I pronounce Qatar. Sorry, we'll cut that right out. TSM, Taiwan Semiconductor, reporting record profits once again as the AI bubble continues over there this morning. We got an interesting story in Bloomberg about Russian banks quietly talking about bailouts. Do you think maybe people are having tough times making their loan payments when, I don't know, when a van pulls up alongside them in the street, grabs them, throws them in the back of the van, sends them into the trenches, and then the guy dies when a drone drops a grenade on his head? You think maybe that guy's having a hard time paying his bills? You reckon that's how that works? It's almost like maybe we should stop slaughtering people in the trenches and just get our financial houses in order. But hey, I know I'm crazy. I just throw these radical ideas out there. I'll see myself out. You guys, please keep up with feeding people into the meat grinder. I wish you luck with your slaughter. Meanwhile, China is possibly blocking the Panama Canal deal. Chinese government wants their slice. They're demanding that a chunk of these ports go to Costco and are threatening to torpedo that deal there. In the latest chapter of China and America fight over everything. And we've got retail sales numbers came out this morning and jobless claims. A lot to get through this morning. How about we shrink my big melon of a head and let's see what's going on in the world of finance this morning. And this is when I tell you, please hit that like button for the YouTube algorithm. And if you're new here, hit that subscribe button and come on back tomorrow to have your coffee with the melon heads because we do this one every day. The S&P 500 is modestly positive here, 11.4 points to the upside. It was negative until about 8:30 when that jobless data and retail sales came out. The numbers were pretty good, not great, but they also weren't terrible. And so the market tended to like that. We've got the Dow is up by about 18 points or 0.04%, just barely in the black. And the NASDAQ is leading the way higher, 0.3% up, 67 points in the green this morning. Meanwhile, the DXY, this is pretty interesting. Up 39 basis points right now, 0.4% higher, slightly stronger dollar. But it's not what the Dixie is doing today that I want to draw your attention to. It's what the Dixie did yesterday. We're going to set this to 15-minute candles so you can see. Look at all this noise right here. This was 10:45 p.m. AM, 10:45 a.m. Eastern time yesterday. The dollar started to tank. And at one point, it was down almost 100 basis points. We went from a high of 98.88 to a low of 97.9. So it was more than 100 basis points before it abruptly reversed course and then grinded higher throughout the course of the day. So what happened? We had this one in Bloomberg. Trump raises pressure on Powell while calling firing unlikely. It was looking pretty likely yesterday for a while there. President Donald Trump said he's not planning to fire Jerome Powell and still managed to make it sound like a threat. Trump's comments capped a hectic few hours that took his pressure campaign against the Federal Reserve chief to a new level and sent markets into a short-lived nosedive. He ran the idea of sacking Powell by a receptive group of Republican lawmakers late Tuesday. An aide said Wednesday morning he was likely to follow through, and then the president publicly backpedaled with a major caveat. I don't rule out anything, but I think it's highly unlikely unless he has to leave for fraud, Trump said Wednesday when asked about axing the Fed chair. It was a nod to the latest front that Trump has opened against Powell, intensifying scrutiny of the Fed's renovation of its two main buildings in Washington. The president and his allies say the project is unnecessarily lavish and way over budget, and they've hinted at financial wrongdoing too. Yeah, of all the things the Federal Reserve has done in the last few years, it's the refurb of the building. That's the offensive thing, right? I mean, look, I'm no big fan of the refurbishment, but of all the things the Fed has done, that's what he's going to get fired for? Okay. All of this is rooted in Trump's view that the Fed is keeping interest rates too high, and it's increasingly disturbing for investors who tend to think central bankers should be left alone by politicians, not besieged by them. And look, guys, I am not the president of the Fed fan club. I don't think we should have a Federal Reserve, but the market was right to freak out yesterday. If President Trump can remove a Fed chair and replace him with a dove who's going to lower rates and spin up the money printers, if President Donald can do it, then President Kamala could do it, or President Ocasio-Cortez could do it. All right. And if you're not comfortable with those idiots having a yes man in charge of the money printer, then you should not be comfortable with the Donald having the same thing. And at the end of the day, sadly, it almost doesn't matter, because no matter which party is in charge, they are going to increase spending. They're going to lower rates. They're going to print money. They're going to inflate. And there's just not enough gold in the whole world. Meanwhile, looking at the bond market, we've got lower yields on the long end this morning. The 30-year Treasury, 4.998. That's down by almost 2 basis points. The 10-year's at 4.453, down a fraction of 1 point. The 2-year at 3.896. That's up by a point and change. And the 1 month is unchanged at 4.312. So the bond market appears to be taking the day off. Not a lot of movement there. Looking over in commodities, we got some red in metals this morning. Spot gold is at $3,317. That's lower by another $30 or 0.9%. Some of that recent strength in the dollar weighing on gold here. It's also taking a chunk out of silver this morning. Spot silver at $37.75. That's down by about 16 cents or 0.4%. But I like the shiny. By the way, later today, I've got a video coming out. I interviewed Bob Coleman, the CEO of Idaho Armored Vaults, yesterday, about this big bifurcation between the paper and the physical silver markets, trying to help us make heads or tails of what's going on there. So look for that one in a couple hours after the stream ends. We've got copper is lower by about 0.2% here, $5.48 for September copper futures. Platinum is higher by about 0.1%. Palladium is lower by 1.5% this morning. And crude oil up about 0.6%, 40 cents higher at $66.78 for August WTI futures. Looking at Bitcoin this morning, it's down a little bit more, $117,800. That's a little bit lower from yesterday's level, but still in that range we've been trading at for the last 2 or 3 days, ever since that whale dumped more than $1 billion worth of Bitcoin off of those highs of 123,000. So Bitcoin just kind of treading water here. We do have some update on that crypto legislation. Crypto regulation bills move forward after record-setting House vote. It's worth pointing out this was a procedural vote. The bill has not passed, but the bills are moving forward. The future of a trio of crypto regulation bills was thrown into question Wednesday after a second day of opposition from conservative House Republicans held up the legislation for 10 hours before it finally moved forward. Fresh opposition also emerged over the course of the day from moderate Republicans who objected to last-minute changes intended to appease an original group of hardline conservative holdouts whose no votes had tanked the bills on Tuesday. Late Wednesday night, a group of no votes flipped to yeses, and the chamber finally approved the rules of debate for the crypto bills and an adjacent Pentagon appropriations package. Sure, why not spend some more money on death and destruction while you're at it? Wednesday's marathon vote set the record for the longest open vote in modern history, a record that had been set earlier in the month. So some difficulty getting legislation through the House here. And speaking of legislation in Congress, oh man, Senate passes the bill to cancel funds for foreign aid and public media. After a late night session, the bill to claw back $9 billion in funds heads to the House. So it's not even done. They're only halfway through here, guys. That's the ironic thing. After all of this, it still is only a little bit closer to getting done. The Senate passed a White House-endorsed plan to cancel $9 billion in federal funding for foreign aid programs and public media after the Republican-led chamber blocked attempts to slim down the package in a marathon overnight session. They tried to make it smaller. That's amazing. They blocked attempts to slim down the package. This is enough spending to fund the government for not even half a day, and they still tried to make it smaller. The measure was approved 51-48. It barely passed at 2:30 a.m. Thursday, largely along party lines, with Republican Senators Susan Collins and Lisa Murkowski, of course, joining Democrats in opposition. The bill now heads to the House, which must pass it by Friday, or the executive branch is supposed to release the funding. So, hey, look, guys, it's Thursday. They got 2 days to get this thing through the House, or they won't even be able to cut that $9 billion. This isn't even done yet. Republican senators defeated a series of revisions sought by Democrats and some Republicans to restore funding in the package that aims to write into law cuts identified by President Trump's Department of Government Efficiency effort. The bill effectively asks lawmakers to claw back funding they previously doled out, including $7.9 billion from foreign aid programs. The plan also would rescind $1.1 billion from the Corporation for Public Broadcasting, the organization that oversees government funding for National Public Radio and the Public Broadcasting Service, defunding it for the next 2 fiscal years. Guys, this is not even a drop in the bucket. I mean, it's not even done. It barely passed. They have 2 days to get it through the House, where nothing is passing anywhere in the House. So even this pathetically small spending cut probably won't end up getting done. It is just impossible to cut spending. Hence, laying on the sarcasm pretty thick this morning. Congress, keep up the bad work. Meanwhile, Trump eyes a tariff rate of 10 or 15% for more than 150 countries. Apparently, the letters are going out once again. President Donald Trump said he would send letters to more than 150 countries notifying them that their tariff rates could be 10% or 15% as he forges ahead with his trade agenda. We'll have well over 150 countries that we're just going to send a notice of payment out, and the notice of payment is going to say what the tariff rate will be, Trump told reporters Wednesday at the White House. It's all going to be the same for everyone for that group, Trump added, saying that the trading partners that would receive those letters were not big countries, and they don't do that much business. In an interview with Real America's Voice broadcast later on Wednesday, Trump said that rate would be probably 10 or 15%. We haven't decided yet. So more tariffs from the Department of Arbitrary Numbers this morning, apparently 10 or 15% for these 150 countries that for now shall remain nameless. And let's talk about Open Door. Meme stock mania returns as retail traders pump shares of this heavily shorted pandemic-era darling. Open Door is surging amid record bullish options volume and a sudden upswing of social media interests. Until very recently, shares of Open Door Technologies had largely been left for dead, but over the past week, retail traders swapping stock tips on social media have helped bring them back to life. Open Door shares have surged nearly 90% since the market opened on Monday. Tom Bruni, editor-in-chief and vice president of the community at StockTwits, a social media platform where investors are encouraged to swap and discuss ideas, said interest in Open Door, measured by page views tied to the stock's ticker on StockTwits platform, had surged by 400% between Monday and Tuesday. That growth rate looks set to double on Wednesday as well. Chatter about Open Door appeared to be surging across a number of social media platforms. Of course, Reddit was involved as well. Look, since going public via SPAC in 2020, Open Door has yet to report a profitable year, according to FactSet data. Although shares of the company saw a modest pop in May after reporting a smaller than expected loss in its first quarter earnings report, The company was one of several offerings brought to market by SPAC king Chamath Palihapitiya. So now this one is ripping. Look, this hedge fund manager, I can't remember the guy's name. What was it? Eric Jackson. He's this hedge fund manager who made a pretty famous bullish call on Carvana in opposition to a short report on that. And of course, Carvana started to rip. So he's got a little bit of street cred because of that Carvana call. Now he's throwing his lot behind Open Door Technologies. And look at this one rip. We're going to have to refresh this to make sure we get a current mark. All right, it was up 43% yesterday, currently higher by 30% ahead of the opening bell today. It was higher by another 40% this morning. At the end of the day, guys, this is an app that will buy your house, fix it up, and flip it. That is not a business model that scales. At the end of the day, Open Door is inevitably bound for bankruptcy. That being said, there is no limit to how high this stock could go because of the short squeeze. So I will be sitting back with the popcorn and watching this one happen. Good luck to whatever apes or whatever you guys are calling yourselves these days that are squeezing this one. Just be careful. That's all. Be careful on leverage, guys. Meanwhile, we got Pepsi earnings beat estimates even as U.S. demand falls. It was a pretty good quarter for Pepsi, not great. Pepsi on Thursday reported quarterly earnings and revenue that topped analysts' expectations despite weaker demand for its food and drinks in North America. Shares of the company rose roughly 2% in pre-market trading. Pepsi reported second quarter net income attributable to the company of $1.26 billion or 92 cents a share. That's down from $3.08 billion or $2.23 a share a year earlier. So a big drop in net income, but excluding restructuring and impairment charges, other items, the company earned $2.12 per share. Pepsi had shut down 2 packaging plants in the U.S., so it's possible they took some pretty big charges in the quarter related to those actions. Net sales rose 1% to $22.73 billion. The company's organic revenue, which excludes acquisitions, divestitures, and foreign currency, increased 2.1% for the quarter. Pepsi reiterated its full-year outlook. It still expects its core constant currency earnings per share to be roughly unchanged from the prior year and organic revenue to grow by a low single-digit percentage. That puts Pepsi stock up about 2% ahead of the opening bell, $138 even for Pepsi. That's up about $2.50 this morning. Another one reporting some good numbers this morning. GE Aerospace raises full-year guidance on an aviation rebound. The engine maker is doing all right. GE, General Electric Aerospace, boosted its full-year financial guidance and topped Wall Street's profit estimate for the second quarter after rebounding demand in the aviation market softened the impact of a global trade war. Adjusted earnings for 2025 will be $5.60 to $5.80 a share, up from the prior range of no more than $5.45. That's according to a statement on Thursday. The aircraft engine manufacturer, which operates as GE Aerospace, also raised its forecast for adjusted revenue growth, operating profit, and free cash flow. The company is benefiting from a surge in orders that had slowed earlier in the year amid market volatility. GE Aerospace touted a 30% jump in revenue for its commercial business last quarter, with recent wins including its largest ever wide-body deal to sell more than 400 engines to Qatar Airways. So GE Aerospace appears to be getting over their Boeing, their Boeing woes, Boeing problems from last year, posting some pretty good numbers this morning. That stock, let's refresh and get a current mark. GE is up 1.8% ahead of the open, $271.20 for GE Aerospace. Meanwhile, Taiwan Semiconductor posting more big numbers here. TSMC stock rises. Outlook is bright as the AI chips boom outweighs tariff fears. Stop me if you've heard this one before. Taiwan Semiconductor reported a record profit for the second quarter as robust chip demand for artificial intelligence applications held up despite currency headwinds and uncertainty about U.S. tariff policy. Taiwan Semi raised its outlook for the year to 30% revenue growth in U.S. dollar terms, having previously forecast a mid-20% rise. Its American depository receipts were up 4.5% in pre-market trading, adding to a 57% gain in the past 3 months. The driver for growth, of course, is revenue from AI-related chips, which Taiwan Semi has previously said it expects to double in 2025 and grow at a mid-40% annual rate for the next 5 years, as they continue selling billions of dollars in chips to essentially Ponzi schemes, in my opinion. All right, now Taiwan semi stocks doing pretty good, up 3.6% ahead of the opening bell, $243 for Taiwan semi ADRs in the U.S. Now we got this one. This one kind of surprised me this morning, and I guess now that I think about it, it's not really surprising. I'm just surprised to be hearing about it. Russian banks have discussed seeking bailouts within the next year. This is in Bloomberg this morning. Top executives at some of Russia's biggest banks have privately discussed seeking a state-funded bailout if the level of bad loans on their books continues to worsen over the next year. At least 3 lenders identified as systemically important by the Bank of Russia have considered the possibility that they may need to be recapitalized in the next 12 months, according to current and former officials and documents reviewed by Bloomberg News. The banks have discussed internally how they would raise the prospect of a bailout with the central bank should that become necessary. The scenario arises because their assessment of the quality of their loan book is far worse than what official data show, according to people and documents. The people, of course, granted anonymity to disclose information that isn't public because they don't want to fall out of windows, said any bailout request was dependent on a continued rise in the volume of bad loans over the next year. Still, they said discussions were becoming more urgent throughout the banking industry. On paper, the banking system is in relatively good health, with profits robust and even amid a rise in so-called non-performing loans to companies and households, with the central bank's key interest rate at a near record high of 20%. Officially, levels of bad debt remain well below those recorded in past financial crunches and that were diffused by the Russian authorities. However, the central bank itself has advised lenders to focus on restructuring credit instead of recognizing the full extent of souring loans. In other words, they're playing the same game of extend and pretend that we're playing here in the West. Just looks like it's a bigger problem with their 3 biggest systemically important banks quietly talking about bailouts within a year if something doesn't give. Hey, maybe, just maybe, you guys want to stop killing everybody, killing each other, and get your financial house in order. By the way, this goes for our guys too. Hey, U.S., maybe get financial house in order. Just throwing it out there. It's just an idea. Again, I know I'm crazy. I do some crazy things like only spend what I have. What a concept. Meanwhile, China threatens to block Panama ports deal unless its shipping giant is part of it. China's going to take their port and go home if they don't get a slice of the pie. Chinese government is threatening to block a deal that would transfer ownership of dozens of seaports to Western investors if COSCO, China's largest shipping company, doesn't get a stake. This one's in the Wall Street Journal this morning. The proposed sale includes 2 ports at the Panama Canal and more than 40 others around the world, all owned by Hong Kong-based CK Hutchison. China's pushing for state-owned COSCO to be an equal partner and shareholder of the ports with BlackRock and Mediterranean Shipping Company, or MSC. That's a container ship operator, according to people familiar with the matter. BlackRock and MSC in March reached a preliminary agreement to buy the ports in a deal valued at nearly $23 billion. But now BlackRock, MSC, and Hutchison are all open to COSCO taking a stake, the people familiar with the talk said. Any deal giving a stake in the Panama ports to a Chinese-owned company would likely upset President Trump, who has threatened to take control of the canal and has objected to Hutchison's ownership of 2 ports there. Hutchison's initial plan to sell the ports angered Beijing, according to people familiar with the talks. Chinese authorities have told Chinese state-owned companies to freeze any coming deals with Hutchison or other businesses linked to its controlling shareholder, the family of Hong Kong billionaire ka-shing, these people said. So we're not fighting about chips this morning. We're not fighting about rare earths. We're fighting about the Panama Canal. Okay? It's a little bit of a change of pace this morning, but it just seems the U.S. and China, well, we just fight about everything, don't we? We also got some economic data. We'll go through this pretty quick here this morning. U.S. retail sales came out pretty good, 0.6% increase month over month in retail sales. That's following a 0.9% decrease in May. That big decrease in May had people a little worried about tariffs maybe causing consumers to close their wallets, but it looks like that ebbed somewhat in June, returning at least most of the way to normal. So the market reacted favorably to that growth in retail sales. We also got jobless claims. Let's do the initial claims first. Initial jobless claims for the week ended July 12th were 221,000. That's down from 228,000 for the week ended July 5th. And that looks like our 6th consecutive week of declining initial jobless claims. So the pace of layoffs keeps slowing. That's good. That's not a sign of weakness in the labor market. However, despite the initial claims slowing, we're not really getting any movement in continuing claims. We're kind of stuck at this high here. Continuing claims, 1,960,000. Let's see. That is up from slightly from 1,950,000 the prior week. So this trend of layoffs are slowing, but the few people who do get laid off are not finding new jobs. That's continuing here. We've had 5 or 6 weeks in a row of this elevated continuing jobless claims. So, let me know what you guys think. Is this showing weakness in the labor market? A little bit of weakness on the continuing side, although the initial claim shows people aren't yet losing their jobs at an alarming rate. Not surprising, because all these zombie companies are being kept alive by payment in kind and secondary offerings in the private equity market. And now we're just going to dump all that stuff into people's 401ks to keep those zombie companies alive a little bit longer. So I'm not surprised that we're not seeing that big spike in people losing their jobs. I just want to say thank you very much to my buddy, the Pasta Man. What's going on, Nashville? He says, Jack's private equity vid with Travis at Real Estate Mindset. So good. So good. I'm going to have Neil Diamond stuck in my head all day now, thanks to that so good at the end there. Thank you very much, Pasta Man, for supporting the channel and for the kind words. And I caught this one right before I went live. I did notice you put that one up there. So I managed to drop a link to that video down in the description below for you guys who are watching on YouTube. If you want to check that out, I did that video with Travis. It would be about 2, maybe 3 weeks ago. Travis and I recorded that video all about warning about these private assets and democratizing access to highly illiquid, let's be honest, dog shit companies. And President Trump is supposedly going to be signing executive orders at 4 p.m. Eastern time today. I wonder if that XO on private assets and 401ks is going to be included in that list today. Probably want to check out that video. Shout out to my buddy Travis at Real Estate Mindset. Thanks for having me on, brother. And thanks again, Pasta Man, for supporting the channel. Robert Feeds the Machine. Thank you, sir. Says NPR is fair game, but I'll miss PBS space time. Elmo has to go back to cleaning septic tanks to fund a rounding error in Jeff Bezos' bank account. Yeah, look, am I happy to see Elmo's funding cut? No. Like, I don't have anything personal against Elmo. I was a kid once. I watched Sesame Street once. Like, I get it. We're broke, guys. And, every time we try to cut a couple of dollars of spending, you get this deluge of, oh my God, how could we cut spending to Elmo? Our spending problems are so big, cutting $1 million of Elmo's funding is not going to solve any of our problems, and therefore we should keep wasting money on Elmo. Look, have you ever seen, walk down the toy aisle in Target and Walmart? There's freaking Elmo merch everywhere. Are you telling me PBS can't stand on its own 2 feet with all the money they're taking in on merchandising? Look, my kids are halfway grown now, and I still got Elmo crap freaking everywhere in my house, bags and bags of it. All right. It doesn't need government funding. They'll be just fine without government funding. Oh my God, they cut Sesame Street. They're cutting foreign aid. There's a unicorns and rainbow school for one-legged albinos that's going to lose funding. Won't somebody help the one-legged albinos? These sob stories, you could write them about everything the government wastes money on. It's how they yank your emotional heartstrings in order to get you to just go along with all the money they are stealing from you, either via taxes or via inflation, to make themselves and their buddies rich. Don't fall for this crap. All right? Yeah, austerity sucks. Everybody's in favor of austerity until it shows up in their backyard. It must happen. We're $37 trillion in debt. It's going up by $2 trillion a year during a supposedly strong economy. What's that going to look like if a big recession actually hits? We got to get this. We got to get our act together, guys. And yeah, it's going to hurt. It's going to suck. And Elmo might lose his funding. Sorry, it sucks. Thank you, Robert, for supporting the channel, sir. Nashville Pasta Man is back again. Says $9 billion, not a drop in a bucket. It's Arizona humidity, which if you've ever spent any time in the Arizona sun, you know that humidity is, not even a drop. I agree. $9 billion is a joke. Let's get the $9 billion done, though. All right. I definitely want the $9 billion to be cut. And then let's work on the next $999 billion coming behind that. All right. This $9 billion of DOGE cuts, Republicans, even if you do get this done like right before the buzzer, does not absolve you of everything you campaigned on. Does not absolve you of the $5 trillion hike to the debt ceiling you just passed. This is a start. Emphasis on a start. Don't even bother making your stupid speech at the podium in front of the press about how you're delivering on your promises to cut waste, fraud, and abuse. Don't you freaking dare, because this is a laughably small number. Get it done and then proceed directly to the next bill, cutting something else. Do not pass go. Do not collect $200. Thank you, Pasta Man, for supporting the channel. Krusty White Bread says, what's Janet's opinion on the private equity executive order? Interesting. What would my girl Janet say about that? Well, Jack, I would just like to say I am a big fan of those zombie companies. I did everything in my power when I was in charge at the Federal Reserve and at the U.S. Treasury to keep those zombie companies alive, because I knew I wanted this fake economy to keep chugging along, just like Bessent and Trump want this fake economy to keep chugging along. We don't really care how much debt and how much damage we're doing to people's nest eggs in their retirements. It's just all about convincing idiots to buy stocks for one more day so we can keep getting rich. Well, as always, Janet, thank you so much for the unusual level of candor on display on this channel exclusively and nowhere else. Nowhere else do you get such insight into Janet's thinking. She just opens up to us. She just blossoms like a flower when she comes on the channel. Thank you very much, Krusty White Bread, for supporting the channel, sir. I appreciate that very much. And thank you, you guys, for everybody having your coffee with the Melonheads this morning. Appreciate that very much. Thank you for the super chats and the support of the channel. And thank you to my magnanimous Melonheads on Patreon and YouTube for supporting the channel as well. Links down below, should you feel so inclined. Along with that link to that video I did on real estate mindset, send a shout out to my buddy Travis and tell him nobody sent you. Hi, Mom. Hi, Dad. I love you guys. Don't forget that like button and that subscribe button on the way out. And until next time, live small and dream big.